business news, we're news for business people.
Good morning, you're watching DayBreak on Bloomberg Quint Live. I'm Alex Matthew. These are the headlines. Asia markets opened positive after US stocks rose to record highs. Robert Mugabe has resigned as president of Zimbabwe, ending his 37-year rule. Kishore Biani unveils Future Group 3.0 as he looks to take on e-commerce players. He partners with Google to open 10,000 omni-channel stores by 2022. Hackers have stolen personal data of 57 million customers and drivers from Uber Technologies, a massive breach that the company concealed for more than a year. With that, let's turn to the international markets, and US stocks rose to record highs on Tuesday as a rally in tech lifted the broader market. Investors also cheered strong quarterly results from top companies in corporate America. Let's go across to Abigail Doolittle for all the updates.
It was a day of records for stocks in Tuesday's Wall Street session. Three major averages all rallied to put in new record highs, with the tech-heavy Nasdaq leading the way, up more than 1%. Behind this rally, then, not surprisingly, technology. Tech was the top sector, with Apple, Facebook, Alphabet, and Microsoft all higher by more than 1%, with many others higher as well. In fact, the SOX, or the Philadelphia Semiconductor Index, the chip index, has taken out its 2000 tech bubble peak, as many of those shares rally too, including Micron, Intel, and Texas Instruments. Now, another top sector was healthcare, up nearly 1% on the session, boosted by Medtronic, higher by 5%, more than 5% after a solid earnings report, and on pharmacy benefit manager McKesson, up about 3%. The best stock for the S&P 500, which did rise above 2,600 for the first time ever early in the session, was Jacobs Engineering, up about 9% on a blowout earnings report, the best day in more than a year. The worst stock, though, Signet, plunged more than 25% for its worst day since 1995 after the jewelry company slashed its full-year guidance. And finally, while it was certainly a good day for stocks, Haven assets traded higher too, including bonds, the yen, and gold, perhaps suggesting that the overall session was not quite as risk-on as record highs for stocks might suggest. In New York, Abigail Doolittle, Bloomberg News.
Let's take a look at Asian markets now. And the Asian markets have opened positive, taking cues from the record close in the US. The Nikkei is up as much as 0.75%. Do look out for China, though. The Hang Seng futures overnight were up as much as 3%. But the important geopolitical news coming in from Africa: Robert Mugabe has submitted his resignation letter to Parliament on Tuesday, ending his 37-year reign as the president of Zimbabwe. His resignation came after impeachment proceedings began against him. Bloomberg's Arabile Gumede filed this report on the historic update from the African nation.
Of course, proceedings didn't follow the script. Of course, on Sunday, we expected him to announce his complete resignation from office as president of Zimbabwe. That didn't happen, but it was only a matter of time. Many would say that his goose was cooked, certainly, and it was only a matter of time before that finally happened. Next in line does seem to be Emmerson Mnangagwa, who was his vice president before he sacked him, and that rolled and steamed over into what happened now, as we're seeing as a case of the military apparently taking hold of government and enforcing what seemed like a coup. It is an apparent coup, of course. They denied that many a time, but it is one that is official now. Robert Mugabe stepping down as president of Zimbabwe.
Well, it's big news there for Zimbabwe, and that's the only leader that Zimbabwe's ever known. But let's move to India now, and Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Darshan, morning. First to you. What's on your list?
Good morning, Alex. The trade setup seems to be decent because most of the global indices are doing extremely well. The SGX Nifty is also poised for a positive outlook. So if you look at the SGX Nifty, it's up almost 23 points. It's come off the day's high, but still we are inching close to the 10,400 mark in trade. So the SGX Nifty is positive. All the ADRs also ended with a positive bias. Dr. Reddy was up almost close to 4%. The other ADRs, be it ICICI Bank or Tata Motors, all of them gained over 1% in trade. So overall ADR setup was rather positive. As far as crude is concerned, gained over 1% overnight on declining US stockpiles. The WTI crude is actually back above the $57 barrel per mark. So that cues coming in from the crude side is positive. Even on the metal side, most of the base metals ended positive on the LME. Look at what has moved. Copper has up almost 1.2%. Nickel was up almost close to 2% in trade. Lead and zinc were up close to 1% in trade. What didn't do well was tin. Tin was 1% lower. Aluminium was also down in trade, and the weakness in aluminium is actually continuing on the Chinese market. COMEX copper is trading muted currently. As far as China is concerned, it's a strong start to commodities in China. Copper is up almost 1.4%. Steel is up almost 2%. Rubber is trading higher, and the weakness in aluminium continues. It's down almost 1% in China currently. Gold is trading with a positive bias for the second day in a row. As far as fund flows are concerned, FIIs sold in almost 700 crores in the cash market yesterday. That's the NSE provisional data, and DIs bought in much more than that. They have bought in almost 825 crores. This is the actual data from the NSE. On a month-to-date basis, heavy buying, 15,622 crores of net buying happened by the FIIs in the cash market, and DIs were net buyers to the tune of 16,000 crores. So more than 20,000 crores of net buying has already happened in a market still now. As far as sectors are concerned, the strong rally in Nifty continues. Nifty's gain for the fourth straight session was up almost 28 points. Pharma and oil stocks did extremely well. Pharma was one of the best performers, up 2%, led by Dr. Reddy's. On the real estate index, Realty, PSU banks, FMCG, these were the counters which were down in trade. The Nifty was up almost 28 points. What contributed? Reliance, because of the big Goldman report came out, moved up. Sun Pharma did extremely well. Dr. Reddy's or Pharma as a pack did well. What didn't do well was pretty much TCS over the past few days has been contributing negatively. ITC has been rather weak, and L&T contributed on the negative side. But 28 points up, Agam, and a lot of counters in the FNO band. What is the FNO Qs indicating?
Yes, Darshan. After a 3 or 4 odd sessions, we're looking at Nifty going up about the mark of 10,300. And when it comes to the futures, well, we've seen more unwinding, at least as far as the futures of the Nifty is concerned. Moving in, as far as coming to the Nifty Bank as well, where we're looking at as well very little change in open interest, or for that matter in the index. So what does this mean for the volatility index? Well, we've seen about a 2% increase, again still range between the range of 13 and 14, but when it comes to the put call ratio, that has moved up to 1.3. And moving in terms of changes in open interest, what we are witnessing is, because of consolidation, a lot of activity around the 10,300 mark. And in terms of changes in open interest, again, as Darshan was mentioning, we're looking at new entrants there. So Jain Irrigation and Wockhardt moves in. On the other hand, we also have a counter which has moved out of the FNO. There you have it, Jet Airways, which makes the total to 13 stocks now, if I'm not mistaken, if I have my calculation right. But Kajaria Ceramics stood out in trade yesterday. The open interest moved up by as much as 60%. So we'll be watching out for this one. Well, slight risk. If should we see a further increase in open interest of Kajaria Cement as well, moving into FNO band, but that will have to be a wait and watch.
Right, coming back to Darshan now for the Goldman Sachs report that you mentioned, Darshan, in your trade setup. They've put out their outlook for India in 2018. What are they saying? So
it's a big report, and individually they say a lot about GST in terms of the bank recap, what about the RBI. So I'll talk you through what they're saying. First of all, as far as the GDP is concerned, for FY19 they expect GDP growth to be almost 8% in FY19 compared to 6.4% in FY18. So that's on the GDP. As far as the GST impact is concerned, what they're saying is that they expect the negative impact from the GST to fade over the next coming year, and the move to recently cut prices in 200 products, that is something that could boost activity in the next 3 to 6 months. So that is extremely positive, and GDP will rise as the negative impact of the shocks that happened over the past 1 year will fade. As far as the bank recap is concerned, what they're saying is that that unlocks credit and private investment growth that will come in and could lower borrowing cost. As far as growth drivers are concerned, tailwinds from civil service wage hike will aid consumption. Also, the fact that the government's push on infrastructure will actually help a lot as far as consumption is concerned. The risk that they're saying any delay in kind of the GST impact that could come in, and the bank recap, if not implemented properly, can be a big risk as far as the outlook is concerned. On inflation, they're saying that the headline inflation will accelerate to 5.3% in FY19. As far as the RBI is concerned, what they're saying is that they expect the RBI to hike policy rates by 75 basis points by mid-2019. So they're expecting the rate hike to come in, and they believe RBI will be reluctant to cut policy rates to further support the economy. And finally, on the current account deficit and the rupee, what Goldman Sachs is indicating is that the current account deficit, it will remain manageable, and the rupee may appreciate against the dollar going ahead.
Well, Darshan, thanks for that. And on that note, let's take a spot check of the rupee and the bond market. Saloni Dhanuka has all those details. Saloni?
Well, Alex, the rupee yesterday rebounded 22 paise to end at a fresh 2-week high of 64.90 levels against the dollar. Now, heavy selling in the greenback by exporters as well as broad weakness in dollar overseas largely supported the rupee's recovery. Now, local currency also benefited from a strong rally in equities market. On the global front, major Asian currencies were trading higher, with South Korean won and Malaysian ringgit gaining the most, while dollar continued to trade steady against major currencies as uncertainty over a major tax reform plan in US continues. Moreover, traders remain cautious ahead of the release of Fed meeting minutes tonight. Now, it will remain a key watch for overall currency pairs, Alex. The dollar index now trades steady at 93.93 levels in the early Asian trade. Now, coming back home, dollar rupee is trading at 64.80 levels against the dollar in the non-deliverable forward market, which indicates a strong opening for Indian rupee in today's trade. Moving on to bond market, the 10-year benchmark yield ended flat at 6.89%. And lastly, global funds increased their rupee debt holdings yesterday. They infused close to 980 crores into their debt portfolio, according to NSDL data, Alex.
Right. We'll leave it at that, Saloni. Thanks. Let's move now to the commodity market, and Jayesh Khilnani joins in with all the updates in that market. Jayesh?
Morning, Alex. Let me start off with oil prices, which have gained overnight in the US market. This is on the back of an expectation that the inventory is going to decline. So the API is expected to report an inventory decline of more than 6 million barrels for last week. So good news coming in over there for oil prices. Also, we understand that Saudi Arabia has cut its exports to the lowest level in 6.5 years. So all in all, very positive for oil prices, and that's why we've seen between overnight and today morning, prices have gained to the tune of 1.5%. Moving on to the base metal space, we've seen positive cues for 3 consecutive sessions. Now, the LME base metal index closed higher for 3 consecutive sessions, led by lead, nickel and zinc, which rose on the LME. Tin and aluminium were the exceptions, which actually declined. Now, copper is actually trading at a 2-week high amid some strike reports that have come in from the country of Peru. Zinc and steel, however, are trading extremely positive on the Shanghai Futures Exchange. Last time I checked, they were trading higher by more than 2% each. As far as gold prices are concerned, we've seen some bit of rebound come about at about 1282 levels for gold. This is on the back of a decline in the dollar prices.
Thanks, Darshan. Thanks, Jayesh, for that. India's telecom regulator has suggested a higher cap on spectrum holdings of telecom operators to encourage mergers and acquisitions. TRAI says the total spectrum an operator or a service provider can hold in various bands should be raised to 35% from 25%. Arpan Chaturvedi gets us all of those details in this report.
So just to put this in context, what the current policy as far as the spectrum cap is concerned is that as far as the individual bands, for example, the 700 megahertz or the 800 or the 900 megahertz bands are concerned, in that the limit is that there has to be a 50% cap on an individual operator acquiring spectrum or having spectrum in individual bands are concerned, and the overall limit of 25%. Now, the new recommendation of the TRAI, the changes that have been brought in are basically that as far as the overall spectrum cap across all bands combined is concerned, that limit has been raised from 35%, or the recommendation is that it should be raised from 35% from the current 25%, and on the individual bands, the 50% limit, the TRAI said that those rules should be done away with, and the press release says that instead of that, there should be a cap of 50% on the combined spectrum holding in the sub 1 hertz band, which includes the 700 megahertz band and the 800 and the 900 bands. Now, these recommendations of the TRAI has come after a letter from the Department of Telecom, or the Telecom Ministry, which has constituted an interministerial group to consider the comments that had come in the past on the financial stress in the telecom sectors, and the IMG was set up after that, and as part of the recommendations or the deliberations of the IMG, it had sought opinion on different issues, in one of which was the spectrum cap, and on that the TRAI's opinion was sought, and these recommendations are part of that letter or the reply to that request from the Telecom Ministry. Now, once this has been forwarded to the IMG, the Telecom Commission will meet in December to finalize the IMG recommendations, which would, after it's finalized, will be forwarded to the Union Cabinet for their final approval.
On to the stock of the day now, and Dalbros Automotive has posted a profit this quarter, aided by an exceptional item. Nikki Prachandani has all those details. Nikki?
Good set of numbers coming in from the company, Alex. Revenue, if you see, that's risen almost 26% in this quarter at a number of around 101 crore as compared to a base figure of nearly 80 odd crore. If you look at the net profitability, that's a multifold jump out there. 133% is the number that we're looking at a profit of around 7 odd crore as compared to a figure of nearly 3 odd crore that we saw in the September quarter of the previous year. EBITDA, for that matter, a strong operational performance coming in from the company, a jump of nearly 30% at a number of 10 odd crore as compared to 7.7 crore in the base figure and the base quarter. Margins have expanded to 10% as compared to 6%. If you look at what goes behind the making of this number, as you rightly pointed out, it's the exceptional gain that's working out well and adding to the jump that we're seeing in the net profitability. It's the 2 crore gain that we're looking in this quarter. This gain relates to sale of partial divestment of strategic non-core material business, and also do remember the fact that profits have come in higher despite your lower other income. Now, your other income has come down by 31% to a number of less than a crore as compared to nearly 1.9 crore that we saw in the corresponding quarter. Finance cost, for that matter, that has reduced a little bit from what it was in the corresponding quarter. And what has led to the operational performance? Well, we can attribute that to the fact that lower employee expenses, that as a percent to your sales, they have come down to roughly around 12% as compared to a figure of 15% that we were looking in September 2016. Also, a little bit about the company. This is the flagship company of Dalbros Group and has a market capitalization of little over 250 odd crore, Alex.
Thanks, Nikki, for that. Let's move on to the stocks in news, and Shraddha Babla has all of that in a list. Shraddha, what's on your list today?
Well, to start off with Dabur, and this is according to a PTI report, they're saying that Dabur has cut prices of shampoos and home care products by about 9% on the existing stock, and that is to pass on the benefits of GST reduction, GST rate reduction. So while GST rates were slashed from 28% to 18%, they have reduced prices by about 9%. So do watch out for that one. You also have CESE, where its Dhariwal plant has won 185 megawatt short-term power purchase agreement from Maharashtra under the Flexi Coal scheme. So positive news coming in. We might see some reaction there. It only means increased plant load factor for CESE's Dhariwal plant. You have PVR, where Elan Group has said that the court has ordered Gurugram Police to file 2 FIRs, that is against PVR Cinemas and its promoters, and this is with respect to a dispute over multiplex space that they had entered into an agreement into some time back. Now, PVR has denied all these allegations made by the Elan Group, and they have called them baseless and incorrect. So let's see how PVR reacts today. And you'll also have team lease on the back of a bulk deal which will be in focus. International Discovery Fund has bought 4.4% stake in the company. The big asset management company T. Rao Price Global has bought a 0.5% stake in the company, and Gaja Capital India has sold about 0.9% stake. So we will watch out for team lease as well, Alex.
Thanks, Shrita, for that. Somit Sarkar has all the big brokerage calls of the day. Somit?
So on brokerages today, first we have is Motilal Oswal on CAC. Now they have maintained their buy rating and the target price of 1,360, which suggests a potential upside of 34%. Now it's CAC's Dhariwal plant has received a new order to supply 185 megawatt of power to Maharashtra, and on the back of this, Motilal Oswal has hiked the plant load factor estimates to 70% over FY17 to FY90 from earlier 50% estimates. Now there was another development of UP regulator rejecting additional PPA for Noida, but according to the brokers, there won't be any impact of this on the company. When it comes to the company's retail business, Motilal Oswal says that the Spencer turnaround is progressing well and the focus will now shift towards growth. Now, Motilal Oswal has hiked the EPS estimates, net profit estimates for the company by 3% for FY19 and FY20 on the back of higher plant load factor for Dhariwal. Second, we have is Macquarie on Z Entertainment. Now, they have maintained their outperform rating and the target price of 615. According to the brokerage, growth is set to rebound starting from the second half of financial year 2019, partly aided by favorable base. Now, a large part of phase 3 digitization will be monetized in financial year 2019 and financial year 2020. Now, the brokerage is expecting turnaround in three key loss-making segments of the company, that is the AND TV, Tamil and music in financial year 2019. Also going forward, the key focus area for Z Entertainment will be over-the-top offering, movie acquisitions and expansion of regional franchise. Now, Z5, which provides the OTT content for the company, lends an optionality to the business and will be a key monitorable according to Macquarie. Now, Macquarie is expecting the Z's EPS to grow at a CAGR of 20% over FY17 to 20, led by sports sale, rebound in ad growth and ongoing digitization.
Thanks, Somit, for that. Now, the e-commerce sector may be gathering steam in India, but the brick-and-mortar players are not throwing in the towel just yet. Kishore Biani has unveiled Future Retail 3.0. The new look Future Retail will focus on omni-store sales, catering only to members. Biani's target is to set up over 10,000 stores across the country by 2022, as he sees a $1 trillion opportunity in the Indian market. The Future Group has also tied up with Google to help expand its online reach. Bloomberg Quint's Charlene D'Souza caught up with Kishore Biani to find out more. Listen in.
I think we have visualized ourselves in terms of building scenarios for the future and how we are going to adopt technology and how technology will help us increasing our capacity of doing business. And that's what we have unveiled. How the layer of physical, digital sits in and how do we expand our business.
Also, can you tell us whom are you tying up with for this? How do you plan on using your data, all your consumer data for this? And also you said that Easy Day Club stores will also, you will start Easy Day Club stores. So what happens to your existing Easy Day stores going ahead?
I think every Easy Day store is getting converted into Easy Day Club stores. Membership has already started. And we are looking at tying up with various partners on technology side because we can't build every technology on our own. So Facebook, Google, Reverie, multiple technology partners on various levels we are tying up with and collaborating to build a platform on which we can serve the customer much better.
Now, e-commerce has chipped away at the market shares of storied retailers like Macy's, Sears and JCPenney. But it's not the only reason the future for these stores looks bleak. Bloomberg Gadfly's Sarah Halzak explains what department stores are up against and how they must revive themselves before it's too late.
Take a trip to your local mall and it won't be hard to notice. The department store business is not in good shape. Big-name chains such as Macy's, JCPenney, and Sears have collectively closed hundreds of stores in recent years, and many of the locations that remain are ghost towns. In investors have responded by hammering their stocks. So how did these storied retailers go from dominant to devastated? The conventional wisdom is that they've been rocked by the rise of online shopping, with Amazon in particular siphoning away sales. Indeed, e-commerce sales have been climbing steadily, in part at the expense of department stores. But that's just one part of the story. Department stores are struggling because they're also being assaulted from so many other angles. Shoppers have been flocking to off-price retailers such as Marshalls and HomeGoods, stores that don't do a shred of e-commerce business, but have won fans for their treasure hunt-like atmosphere.
Ooh, I love that.
Long in the back, short in the front.
Ugh, I can wear that a million times.
Beauty counters were once a big draw for department stores, but that format hasn't appealed to millennials. Instead, many of them are opting to buy from specialty stores such as Sephora and Ulta that provide a more self-guided shopping experience. And it doesn't help that mega brands are starting to sour on department stores. Ralph Lauren and Michael Kors are among the marquee labels sending less inventory to such retailers. That in turn hurts the store's fashion credibility. Department stores are fighting back in a variety of ways, including by selling off lucrative real estate. But their best shot at survival is to proactively close more stores more quickly to focus only on their shops in well-trafficked malls. Meanwhile, they need to hustle to improve their online selection and user experience so they can better ride the e-commerce wave. If they don't take bolder action soon, it may be too late.
Now, personal information belonging to about 57 million Uber customers and drivers was stolen by hackers last October, a breach that the company kept hidden for a year. This week, the company fired its chief security officer and his deputy. Bloomberg's Eric Newcomer has this report.
The Federal Trade Commission was in the middle of investigating Uber when this happened in October 2016, and Uber learned about it in November 2016. They just had sort of a resolution of issues with the New York Attorney General's office. So it was clear to them that there were government agencies that were very interested in what was going on, and they decided to keep it quiet, pay $100,000 and get these two hackers to presumably delete the information they had on 57 million people.
Eric, you know, looking at this brief statement coming through from Dara and saying that he makes no excuses for it. He only took over in September. He's saying they're trying to make changes to the way they do business. This kind of goes to the heart of all of the skeptics talking about the governance issues at Uber, right?
Right. I mean, that's why governance has been a top reform. I mean, this is their chief security officer is ousted as part of this. You know, this went to the person who is charged with making decisions about this, a former federal prosecutor and executive at Facebook. And then there's obviously the question of what role Travis Kalanick, the former CEO, played in it. You know, he knew that this hack had taken place in November 2016. And so I think the question is going to turn to him, how much he knew. You know, he's not the CEO anymore, but he has a board seat. He controls two other board seats.
Right.
He's, you know, he's at least the second most powerful person at the company today.
And it seems there's no keeping the Bitcoin down. A theft of $31 million of a cryptocurrency peer renewed concerns about the security of digital coins. The theft involved the 20th most popular cryptocurrency, that's Tether. The company behind Tether has said that in a statement that a malicious attacker removed tokens from the Tether Treasury wallet on November 19th and sent them to an unauthorized Bitcoin address. The company said that it's trying to prevent the stolen coins from being used. Bitcoin originally tumbled more than 5% on the news of the Tether theft, but then proceeded to pay all of those losses to post a fresh record high. There are a few stories that you should consider reading on the website, that's BloombergQuint.com. Here are just a few of them. The first one, Apple found that its main supplier in Asia has been employing high school students working illegal overtime to assemble the iPhone X. Interns at a factory operated by Hon Hai Precision Industry worked voluntarily and received benefits, but worked longer days than Chinese law permits, Apple said in a statement. Now, the government has agreed to lower GST on under construction affordable homes under 60 square meters to 8% from 12%. Rajiv Talwar, who is the chairman of National Real Estate Development Council, told reporters. With that, it's a wrap on this edition of Daybreak. All you need to know is up next. Do stay tuned. This is Bloomberg Quint.